Today, we're taking a look at a unique indicator that can help us better spot bullish momentum during strong trends. We'll combine it with a couple of additional tools to build a complete scalping trading strategy, one that I'll test over 100 trades to see if it truly holds up. So let's jump into TradingView. First, head up to the symbol search bar. We'll be working with Solana in the crypto market, but this strategy can also work well in forex or stocks. I'll be testing it on the 1-minute chart, though you're free to adapt the time frame based on your own style. Now click on Indicators and search for Andean Oscillator by Alex Grover. Let's start by double-clicking on the indicator to open its settings. In the Inputs tab, we'll leave the default values unchanged. Then go to the Style tab. Disable the signal line and make the bullish and bearish components more visible by increasing their line thickness. The logic behind this indicator is actually very simple. Whenever the bullish component crosses above the bearish one, it signals a potential uptrend, and when the bearish component is above, it suggests a possible downtrend. But as you can already see here, this indicator alone isn't reliable. It generates a lot of false signals, especially in sideways markets. That's why we need to filter these signals. So let's add 2 more indicators to improve accuracy. The first one is the Lawrence Activator. We'll use the version by Alex Grover. Also add the UHL Moving Average Crossover. Again, take the one by Alex Grover. Now let's configure the Buy-Sell indicator. Double-click to open its settings. In the Inputs tab, change the length from 100 to 500 and the multiplier from 5 to 2. Under Style, disable the first 3 options and change the buy label color to green, or leave it blue if you prefer. Next, let's adjust the settings for the moving average crossover. Again, double-click to open the settings. In the Inputs section, set the length to 500 and multiplier to 2. In the Style section, you can keep the default colors or change them, like I did, to green and red for clarity. The UHL consists of 2 moving averages. When the green line is above the red one, a green cloud appears, indicating an uptrend. When the red line is on top, we see a red cloud, suggesting a downtrend. If the 2 lines are very close and the cloud becomes thin, it usually means the market is in a ranging phase. As explained earlier, an uptrend is confirmed by a green cloud in the UHL moving averages. Within this bullish trend, we now need to identify a pullback opportunity. For that, look down to the Andean Oscillator. We wait for the green line to cross back above the red line. This crossover is our pullback trigger. Important: in order for this to be valid, the price must not close below the red moving average during the pullback. So from the point of the initial crossover to the next one, we need the price to stay above the red MA. Once that condition is met, we wait for the Lawrence Activator to print a buy signal. That happens here, so we enter a buy trade at the open of the next candle. Set the stop loss just below the most recent swing low and initially target a 1-to-1 risk-reward. Once take profit is hit, we move the stop loss to break even and extend the TP to 2-to-1 risk-reward. This trade hit both targets, so we record a successful trade. Now let's look at a short setup using the same indicators. First, we confirm a downtrend with a red cloud from the UHL moving average. Then, we wait for a bearish crossover in the Andean Oscillator. During this pullback, the price must not close above the red MA, and the Lawrence Activator prints a sell signal. We enter at the open of the next candle. Set the stop loss just above the last meaningful swing high and target again a 1-to-1 risk reward, then trail to a 2-to-1 risk reward. This short trade also resulted in a win. So let's start with the 100 demo trades. I'm back after 32 days with the full 100 trade results, and for a 1-minute chart, that's quite a long time. But the effort paid off. Just take a look at this beautiful performance chart. I honestly didn't expect this kind of outcome. We ended up with 47 winning trades, 42 losing trades, and giving us a win rate of around 53%. When we combine that with a risk-to-reward ratio of 1 to 2, we arrive at an impressive 104% profit on the account. If you started with a $1,000 account, that would mean $1,040 in profits before fees. We had a winning streak of 5 trades, and the worst losing streak was just 4. That's why the maximum drawdown was only about 8%. Of course, in real trading, we also have to account for fees, which vary by broker. In my opinion, there's not much room left for optimization here. Just keep in mind, this is based on 30 days of testing. Performance can vary a lot month to month. I know many of you are chasing fast profits, but trading the 1-minute chart requires intense focus and discipline. Price moves fast, and emotional decision-making can quickly sabotage your results. But now I'm curious. Should we test this same setup on other time frames, like 5-minute or 15-minute charts? Let me know in the comments, and if you found this helpful, consider liking and subscribing. I'll see you in the next one.